this rating is a little bit myopic, in my point of view. Do you think that this is an ideological point of view from S&P, with regards to Bitcoin, or is this more procedural, operational, with how digital assets in general are treated?
As we started in the episode, Bitcoin's only 17 years old. And so when you're approaching a young asset like that from the perspective of a rating agency, it might make sense to write it off to a zero, right? Hey, you're only 17, you're going to wrap the car around the tree.
Mm,
There's no doubt about it. But I think that a more thoughtful approach would be to actually kind of do a bottom up analysis of Bitcoin as software, as a monetary system, as a decentralized network, and really think about it from that lens of, hey, if you remove all these single points of failure, you de-risk, you create what I call the least uncertain monetary system in human history, and you kind of start with the fundamentals and then you layer on the price risk, right? So I think that if they took that approach, they could look at it almost from just by comparison to all other asset classes and say, okay, how often has Bitcoin had negative 70% over XYZ period, and what's the recovery rate? So obviously we know that Bitcoin always recovers. At what rate does it recover? And compare that to other asset classes, and apply that framework where maybe you would give Bitcoin a 50% haircut or a 30% haircut or a 70% haircut. And, but to give it 100% haircut and say, oh, this is Beanie Babies, uh, that doesn't seem very rigorous. Now, I think that to be charitable and a steelman S&P's approach to the credit rating and to starting with a 100% haircut is that they could actually increase MSTR's credit rating in the future, right? Give it a B plus, give it a double B, triple B, give it an A minus, right? And say, oh, well, given Bitcoin's performance, and now let's say we're in 3 years, right? It's 20 years old now, it's got far more institutional adoption in 3 years, et cetera. And it has not had massive drawdowns. Well, then you can start increasing how much credit you give for holding Bitcoin as collateral, and that before you know it, that you're not, because I think that what S&P doesn't want to do is move the market, right?
mm,
They don't want to say, hey, STRC is AAA, and the market has it at B minus, because the yield is 10%.
mm.
So it would be a little weird for them to be completely out of market on the rating. This is how they're going to follow the market as more demand comes in and as the yields compress. That they'll start improving the credit rating, and then it'll create a flywheel where then increasingly conservative institutions will be able to allocate, and then the more aggressive institutions will be able to allocate more.